is Michael Ogechi Abby again with Enterprise Express Tax Service. Today we're going to talk about itemizations. Um, Over time, the tax law changes have also impacted the way we itemize, or rather the way that we can itemize especially on the 1040. So typically, you get what's called a standard deduction, which is what the government gives you off the bat as a deduction on your taxes. This is usually dependent on how much you earn and your filing status. So if you're filing single, if you're filing head of household, if you're, filing separately, your standard deduction amount would change. And in some cases, also your age. For instance, if you're over 65 and considered a senior, your standard deduction amount will probably be different from someone else. And so over the years, this has changed. When President Trump passed his last major, the last that before the big beautiful bill, the last major tax law that he changed was back in 2018. And when that came in, there were a lot of changes to the itemizations. A lot of things that were usually itemized were no longer um, in place. Okay, but the converse of that was that the standard deduction amount increased. So in other words, what the government was saying was, we're taking away some of these itemizations that are typical. However, the standard deduction amount has increased. And so taxpayers now have the choice between either itemizing or choosing the higher level standard deduction amount. That's also the same case this year, 2026. Most of the standard deduction amounts have also increased as well. So we are seeing some cases where people are actually choosing to file using the standard deduction amount because it's gone up as opposed to itemizing. Okay, why would you itemize? Well, there's certain things that you almost have to itemize because it's available for you as a deduction. I'll give some examples. Your mortgage interest, that's an itemized amount that you can itemize on your taxes. And the form that we use in these cases is the Schedule A. Um, your real estate taxes that you pay, right? Usually these are escrowed through your mortgage, but some people also pay it not via escrow. They decide to pay it themselves. Well, that is an itemizable amount. That's a deduction that you can take and can be itemized. If you give a lot of stuff to donation, for instance, Salvation Army and Goodwill, if you give a lot of money in cash, maybe to your church or maybe to a 501c organization, that is also an amount that you can put as an itemization on your Schedule A. So as you can see, one other thing as well is if you have medical expenses, out-of-pocket medical expenses, but beyond 7.5% of your AGI, that's when it makes a difference. That also is an itemized amount, something that you can itemize on your taxes. So as you can see, there's a plethora of items that can be itemized that will most likely, with a lot of people, make them decide not to take the standard deduction, but rather to itemize. The form that you'll always get, what I would definitely advise anyone to do is to go onto the IRS website and download the Schedule A form. It will give you a full list of what can be itemized and give you a better understanding. And that way, when you're talking to your tax preparer, your CPA, or anyone else who's doing your taxes or yourself, it gives you a better understanding of one, the Schedule A form, and also what you are able to itemize as well. And also gives you a better understanding in terms of the choice, whether to choose the standard deduction or whether to itemize on your tax return. But I would always recommend that you talk to your tax preparer or CPA to give you expert advice on which way to go. Once again, my name is Michael Ogechi Abby with Enterprise Express Tax Service. If you like the video, please click like and subscribe to my channel. Thanks. Bye.